Hello, fellow crypto turds. Welcome to the second installment of our PP crypto trading series, where we will cover different variations of the B and D pattern. All right, so here we are at the Bitcoin chart. Got some fresh space for you to do a brief review on the B and D pattern. Just as a review, you might recall that the B and D pattern is basically a sideways B where we expect a nice huge D to form, that D-shape price action. And when we do have that D-shaped price action, we call this a raging B and D. Likewise, though, we can have a rejected B and D, where we see that price action dip. On the flip side of things, though, we also had our inverse B and D, or raging inverse B and D, where we expect price to drop, and then our rejected inverse B and D, in that case where we would expect it to drop, but it decides to continue. So with that brief review, let's go ahead and jump into some variations. Now, the first variation I want to cover with you is a variation where the B's form, as you can see on this chart, we have a pretty nice B forming here and here. But while the B's form, you notice that there were some hairy situations. You had wicks form right on the cup. And these hairy situations may have been scary for a little while. If you were tracking price action thinking, wow, we're starting to see a nice, beautiful B form. And you see this wick just dive straight down. But price closes above that wick. In those cases, you can be extremely bullish, and you can be almost sure that a raging B and D is to follow. And the reason why is because if you see a wick like this, that means a lot of people are trying to sell. They may also be staring at a beautiful pair of Bs, and they may be thinking, wow, I'm going to go ahead and break the base of that B and get a lot of people very bearish so that everyone sells. I'm going to short it, make a lot of money. But bulls come in and they just lick it all up. And by doing that, you can see, wow, lots of volume coming in, price dipped so far, it even broke the base of the B, but the bulls ate it all up. In that case, it's a very bullish pattern. So you can expect then, and you can see wicks also came down here. It got very hairy, very hairy. You can expect a very bullish B and D pattern to form. Now, obviously, looking at this just with an untrained eye, you're thinking to yourself, well, PP crypto, the wicks were there, very hairy. Bulls ate it up. They probably have hair in their mouth. And price did not continue with a very powerful D. And I argue, maybe not. But if you're looking at this variation, you are not going to be trading the B line like you normally would. If you recall from our past video, you would only enter a B and D trade if it breaks the B line, and thus you're seeing price rage on, and so you're eating up all those profits. But when you're talking about a hairy B, well, you don't want to enter at the B line. You can anticipate a raging B and D. You actually want to enter on the second cup when it either wicks or tests the base of that cup. You want to enter right there. And so if you did take this trade, seeing these wicks, seeing bulls with hair in their mouth, and you did take this trade and you did enter right there at the base, you would have had, by the time it even tested the B line, a 27% profit. Now, at that point in time, yeah, sure, it tests the B line, it gets rejected as support. Well, all you have to do then is notice, okay, it went up, it got front run, didn't quite hit it, but it was rejected. You just wait. You just wait for price to retrace again, and at that point, you exit. So if I were to exit right at that retracement, we're talking really a 25% profit on price that didn't even continue into a raging B and D, but all you did was look at those hairy wicks and think, oh, I need to get some action there. Huge profits. That's the power of a hairy B&D. Now, hairy B&Ds can be found all over the place. It can be found at different time frames. So even if you're a swing trader looking at the 4-hour chart, or let's say you're a day trader, you're looking at the 15-minute chart, or you're a scalper and you're looking at the 1-minute chart, just follow the B&D pattern, look for wicks, guarantee 100% profitable trades. Remember, here at PP Crypto, 100% accurate predictions. Okay, so that moves us into the inverse hairy B&D, and I'm not really going to show you a live example. I'm just going to draw you some pictures. I really enjoy drawing B&Ds. It's one of my favorite pastimes, even. When I was studying B&Ds of all shapes and sizes all through those years, I often sketched them. It helped me prepare my mind mentally for these trades. And so here's an inverse raging B&D. Again, if you see price, here's my candle, a huge hairy wick coming off the base of that B, but it's all bought up, in this case all sold up. Then you're going to want to make sure that on the second cup, that second sack, I like to call it sometimes, that once it touches the bottom of that, the base of that, that's when you enter your short. That way you can front run it. You can enter it early. You don't even need to wait for it to test that B line as support in this case. You don't even need to wait for the breakthrough for confirmation. You can just immediately trade, because those wicks really give you an idea of where the market's going. Okay, so that's the first variation. It's going to be very helpful to you. The next variation is the lopsided B and D pattern. So to give you an example of the lopsided B and D pattern, let me use a live chart for you. Let's see. Oh, you know what? There's another hairy B and D. Just staring me right in the face. Just sometimes slaps you right in the face. Big old hairy B and D. But that's not what I'm trying to show you right now. I'm trying to show you the lopsided B and D. And I think I found it. In fact, it's kind of funny because it is right there among the hairy B and D. All right. So I'm looking at this hairy B and D, and actually I'm looking at this as a nice huge B, just absolutely beautiful, huge cup, and then this small little secondary cup. And so in this case, it's lopsided. This one's a little shriveled up. And when you have a lopsided B, you can know that most likely price is not going to continue to a raging B and D, and price is most likely not going to continue in a rejected B and D. When you have and by the way, you always want this to be the right hand sack, the right hand cup. If you have a shriveled up right hand cup, that's when you know, okay, most likely this is going to continue in a range. It's kind of consolidating, it's continuing in a range. We're not looking for a breakout on either side. And what you can do then is you can go ahead and take your parallel channel tool, and you want to start at the B line. Just draw that horizontally across, and then pull down to you could go to the wick. I like to go to the candle close, and there's my range. And you can see in this case, look at that. Look at how much it's ranging. Now, there is a strategy to playing lopsided B and Ds, and a strategy to play the range. And that strategy to play the range is basically this. When price is testing the top of that range, that's when you're going to want to short. You can wait for confirmation because it could break out on you. But if it doesn't and it bounces off the top of the range as resistance, you can enter short. And if price goes to the bottom of the range and bounces, tests the bottom as support, then you can go for a long. And in this case, the lopsided B formed. Price did not quite touch the very top, but in this case, it got front run. You could enter your short. You can enter your short there. And if you did enter your short, as you can see, price, this is current price. Price is making its way down to the bottom of that range. So if you did enter that short, understanding that, well, we're most likely in a range, it looks like price is dropping, you would already be at a 13 to 14% profit there. Very powerful. Lopsided B&Ds are very powerful. In fact, I'm going to go ahead and show you another one. Let's find another one. I mean, they're all over the chart. They're not very hard to find. A lopsided B and D. Well, look at this. We have a lopsided inverse B and D for you. Like I said, once you get used to these patterns, they're really just going to pop out and slap you in the face. And the bigger they are, the harder they hit. So here is my beautiful full sack, and then my little shriveled up one. And so I'm going to go ahead and take my parallel channel using the B line, just drawing straight across and going up to the base of that sack. And look at that. Here we have a nice, beautiful range. So, again, how are we going to play this range? Well, while trading this B and D pattern, I'm definitely looking for price to touch the top and price to touch the bottom of the range. And when it does touch the top of the range or the bottom of the range, that's when you're looking to enter your trade. And in this case, we formed our lopsided B. Price continued down, touched the bottom of the range, and look at that. Beautifully bounced right there. And that's where I'd enter my long. Sure, price went through this phase here. It tested the bottom of the range again, but look at what ended up happening. I went for a long, and it went to the top of the range. Now, when it hit the top of the range, if you see a rejection off of the top of the range, that's when you can say, okay, I'm going to close my long, I'm going to go for a short, because I know price is most likely going to make its way back to the bottom of the range. But in this case, I would be in a long still, and I would hold my long, and as price goes to the top, it broke the range easily, retested here, the top of the range, and continued on. I'm not going to close my long. Are you crazy? I'm going to let that ride. And in fact, here at PP Crypto, predictions are 100% correct. We would have known to let that ride. And so in that case, I took a 91% profit on my paper trading account just from that one trade, understanding lopsided B and D, play the range, boom. Absolutely beautiful. So hopefully you understand now that a hairy B and D gives you confirmation. You can see a wick blow through the bottom of that B and get eaten way back up. Well, it's very bullish. If you're looking at an inverse B and D and you have that wick blow through the base of your B but gets eaten up and your candle closes within the pattern, that's very, in this case, bearish. And you can trade around that. Now you also have your lopsided B and Ds, which I've shown you a few examples. Just to refresh your memory, if you have a nice, beautiful, juicy B that then turns lopsided, a little disappointing, well, you know what? Price is consolidating. Most likely it's going to be playing in a range. And if it plays in that range, easy money. You just trade the bottom to the top and the top to the bottom of that range. It breaks out, you stay in your trade. Now, I know some of you may have a hard time. You haven't been studying B and Ds like I have for years and years and years. You haven't been drawing them all through your childhood. You haven't been infatuated with this B and D pattern. You haven't had dreams of trading B and Ds like I have. So I know it's a little uncomfortable for you to start working with a new pattern that you may not be very familiar with. But I do want to show you that a lopsided B and D, actually, sorry, my nose is a little itchy. Lopsided B and D, it's actually very much so like a triangle. You know, some of these pattern traders that use these inferior patterns, they may be like, that's not a lopsided B and D, that's a triangle. And you know what? Yeah, it kind of looks like a triangle. I still think it's inferior, but here you have your descending price action. And then here you have the bottom of your, I'm going to go ahead and use these wicks here. And you have your price on the bottom. It's respecting this horizontal line. And look at that. It's a descending triangle. And so with a descending triangle, you know price is consolidating or going sideways or lopsided BND playing within a range. And then you're looking for the breakout of that triangle. But there's danger in that, look, we had a false breakout. And that's what all of these market makers out there, they're going to do. They're going to create false breakouts. And if you're using inferior patterns like a descending triangle, you're going to see a breakout of the triangle and you're going to go, oh my God, I'm going to go long on that. Oh my God, it's so bullish. And then what happens? They liquidate you. They pile on the shorts. You're back in the pattern now, completely liquidated. If you just used the B&D, you would have been fine. And then when you're closed out and liquidated and you have no position, you have no money to get into a position, then they continue on with the pattern and they just go, haha, sucker, you should have used the B&D pattern, not your inferior triangles. Anyway, I'm just preaching to the choir, I'm sure, because all of you guys have already made millions on your paper trading account after the first installment, so I won't drone on and on that. Well, that closes our lesson for today. Be sure to continue looking out for B&Ds. Hopefully they're slapping you in the face as I speak now, and you're already very comfortable with them. Add on the hairy B&D and the lopsided B&D to your tools and strategies and make some moolah. Have a good day. PP Crypto out.